Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and I'll be your host for about the next 25-30 minutes here on Options Guide TV. So the markets are a little bit resilient today. Surprised to see the Russell 2000 index up a smidge, while we have the S&P 500 index down about 1/3 of 1%. So I guess the Russell 2000 is leading the way here, and bounce back in the Meg 7. So I maybe that's a flight to quality. I don't know, but we're finally seeing Nvidia making a little bit of headway. That's up 2.5%. Microsoft is up a good chunk, 1%, and that is driving the Nasdaq, or supporting the Nasdaq. Well, we see a lot of weakness across a lot of the industrials in general, and consumer discretionary is down a little bit today too. So our gold trade, well, looks, may I say, genius, right? We knocked that one out of the park in that we sold a put spread to get bullish on gold, and then we just tossed in open wing butterfly for good measure. So that position we need to look at, and we're going to start with that position. Let's run over the Tradier Pro software, and we see here's the gold position right now. All of our option contracts are in the money on GLD. So let's take a quick peek at where we're at with it. Gold right now is 490.34. So safe haven trades outside of the market. So over the weekend, gold drove higher concerning what is going geopolitical concerns and what is going on overseas. And we see that we are up 1.3% today. That's enough to drive it above our high strike. So we got the underlying where we want it, if you will. Let's go over to the options grid and let's look at GLD, because we have 1 week for this position. Now, there's no reason to rush and get out of it because now we're in control. So here's the way that we want to look at the gold trade. Here's the March 4th expiration. All right. And that is our expiration. We are in the 480, 485, 487 on the March 6th expiration. All right, March 6th. So 480, 485, sell that 2 times, and we're going to buy the 487. All right, so we're at 180. The maximum that this can trade for is going to be $5. So we're laying here. Let's send this to the what if calculator and realize that this is taking today's prices. So it's not looking at it as it's not going to be 100% accurate on the profit and loss graph. But I bring this up because we got to have a plan now. Now that we still have our short put spread, which we're probably doing very well on. We'll take a quick peek at that. We probably earned at least 50% of the premium at this point in time. Maybe not. We got a long ways to go on that one a little bit. But here we are at 490. If the market now drifts back this way, and I can even zoom in a little bit more, as expiration approaches, we're fine anywhere up to here. So with the March 6th expiration this Friday, if the market comes back to 485, that's when we want to get out. You can close it right now if you want to. The risk with the gold position is that it trades after hours. You can so you're going to have, sometimes if you look at the charts, you can even just see from the candles that you have gap openings because it trades when the market's not open. But this is an ETF that tracks it. So that is your risk. But if it's coming this way, eventually this profit and loss graph will start drifting higher with the expiration so close. So this line will start morphing into the profit and loss graph at expiration. And if it comes on down, it gets to this range, then we're in the money and we're looking really solid on that trade. And then if we go back and we look at our portfolio and look at the gold trade, so we sold the March 27th expiration, 476. $17 is now trading for $9. So we're not bad on the trade. This is $9, and this is now trading for $6. So we could buy it back. Yeah, we're close, but we still got 25 days remaining to expiration. We're just going to let this one ride. Let's go and see where this is at. This is at 90. Let's just check out the trade. March 27th. So here's our other position, 476 in the portfolio and 466. 476, we're going to sell that. Hit the bid. And 466, we're going to hit the buy. Too many legs. 1 second. I got to clear this out. Sell and 66 buy. All right, 290. So yeah, we're not quite 50% yet. I think we put this on for 450 when we put the trade on. So we're close. We're close to being able to take off the trade. And if we did take off the trade, what we would look to do is close it and then look to sell another one. And I want to stay long gold. I don't have any problems with it. I do like the underlying. The only risk is that it does trade after hours, and you can buy gold whenever, right? So because of that, we got that type of gap market risk on the opens, but we could see buying this and rolling this up. So by the end of the week, we'll probably look at this trade again. Well, ideally, if you have the position on, it would be an active position, right? You would be looking, make sure this does not get below the 485 on the gold price on the GLD. If it does touch that, you just sell it and you get out and you take whatever you can make, because everything in this, it was basically, in theory, a free trade, in that we sold this, brought in a bunch of credit, and easily paid for the open wing butterfly. So now we just got to decide when we want to take it off. We take it off now. We're profitable, but there's no reason to it. In case if it does come back to 485, we'd even be more profitable. And then we had the Walmart trade, and for some reason the system did not want to work with Walmart last week. So now we got our grid up and we're working just fine. We are up 50% on the trade, 90. I guess we're down a little. I would assume we're down a little because of the market too. Okay, so our order's sent to the floor. Here's where our order is at. We're at the midpoint. 25.38 is where our limit is at. And we can change that up. What we're going to look to do here is we want to roll this out. We're going to have a lot of big retailers that are going to be reporting this week. Let's name a few of them. Well, Kroger's is going to be in there, but we got Costco after the close on Thursday. We got Target before the open tomorrow. We got Best Buy before the open tomorrow. So we're going to have a little bit of volatility that I'm sure will transfer over to Walmart in this situation. Do we want to ride it through earnings, or do we want to sell it and let the week play out, considering the geopolitical concerns that we are seeing right now? That is the question. Our plan was to roll. Still kind of like Walmart. It is pricey. That's the only other thing, is that it is pricey. Let's just close it. We're going to close it. So let's take the Walmart position. We'll close it out. Other thing that we could do is roll and actually sell a call against the position. All right, let's replace this. And we got to give, once again, we're in the paper trading app, so we got to give up a little bit more than we want to. So we'll go 25. Let's replace it at 25. That order's been sent to the floor. We'll let that work a little bit. We'll come back to Walmart. I'm still not a. I don't mind writing it into earnings. I guess the weekend's events have kind of made me slow down a little bit, but the markets are being resilient. That's for sure on these positions. Okay, so options grid, orders, portfolio. Let's look at doing it. Let's do our standard earnings trade today. So we'll with Best Buy or Target on the open tomorrow, we can toss in a trade on that and take a peek at what we want to do in those positions. But on Wednesday, we also have Broadcom on the I guess it's after the close on Wednesday. So that stock is going to be, highly volatile. That will be an interesting one to trade. I wouldn't mind putting on a trade today in Broadcom, but I think we'll wait till Wednesday and then we'll look at Broadcom there. So just so that we can put a trade on for the week, let's go in and let's look at Target this week. Target doesn't do as well. It trades at a much lower valuation, but it's a little different than Walmart. Target does have stores that have food in them, but it does struggle a little bit in that space relative to Walmart, and it always trades at a lower PE, but they're trying to get a foothold. But the stock has, I guess, it's been trading sideways a little bit, but we have our ducks in a row, right? We got the stock looks fairly strong in that we have the 200-day below the 50, below the 20, but we did broke down to 20 just a little bit ago. All right, let's lean bullish. Let's lean bullish, and what I'm going to do on this trade, I just want to do a very simple trade, and it's going to be a 50-50 bet on Target. I'm not extremely bullish on the underlying, and we can do it one of two ways. But what I'm going to look at doing is one of my favorite trades around earnings when I just want to play the earnings. And so we're going to go out, we're going to give ourselves a little bit more we're going to go out to the March 13th expiration. We're going to go out 11 days, and we're going to straddle the stock price. Right now, we see Target trading at 113. Let's look at what the expected move is on the short term. You got about 10 points in there. If you bought the at the money call, you're paying 510. If you bought the at the money put, you're paying 455. So we're talking about $10 approximately here. A little less than 10% on the movement in the short term over the next 4 days. That's a big, fairly decent size move in Target. So yeah, let's do the short term here. Let's go to the 11th, that expiration, and we're going to straddle where the stock is at. We're going to go 3 points in. We're at 113.17. We're going to buy the 110. We're going to sell the 116, and we're going to do this for about $3. It'd be a little bit more because we're a tad in the money, but I'm guessing it's going to be about $3. Here we go. Let's buy this one. Sell this one. 3.25. So it's a little bit over because we're at 113 and 10 cents is where the market is at. So we're a little bit on the call side, and that gets translated into it. But if you look at any option chain where in the real world, it works out pretty well also in the real world as opposed into the theoretical world. But if you are equidistant in and out of the money, you are buying the same amount of time premium that you are selling. So if we look at the extrinsic value, the time premium here, you're buying $4.21 worth of time premium, and you're selling $3.98 worth of time premium, just focusing on it. Now that difference is the fact that we got to pay a little bit more than $3, right? $3.25. So we're buying a little bit more time premium than we're selling. But what does that do? That takes that out of the equation. So if implied volatility is hurting the one that you bought because it came off after earnings, then it's helping the one that you sold, and it's helping them on the same basis. We're going to have 11 days for this to play out. We're basically saying we're looking to pay 325 to make 275, and that's simple. That's the way the trade is going to be. The market goes down below 110, we lose our 325. If it goes up above 116, we should be able to capture close to $6 on the trade and make our 275 on the upside. So that's going to be the paper trade. Let's send this one to the trading floor. Of course, we start talking about a trade and the market moves against us as usual. All right. Sent it to the floor at 325. That's where I'd want to trade it. If not, I would adjust actually, because I want to make it all about target. It's going to be before the open tomorrow. I don't want to pay more. If I'm going 3 points wide, I definitely don't want to pay. Or I'm sorry. If my spread is 6 points wide, I don't want to pay more than half of that, which is $3. 325 is okay. 340 is not. I want to make it a 50-50 bet in that instance. So the market's coming down. This should adjust that way. All right, we'll leave it and we'll come back and we'll look at it. So we got our Walmart trade in at $25, trying to sell to close. And our limit here's 25, and we're at 24.45 on the bid. All right, let's replace this order. And 24, we'll go 75. Give up another quarter. I want that trade to get executed so we can adjust it. Portfolio. All right, so that's our paper trade that we have on. NVIDIA is bouncing back. We're down 27% on our option contract, but we're finally seeing that stock move a little bit today. It took a while to get a positive day after an incredible earnings report. Up 3 at 180. Our delta on our call option is 74 at this point in time. All right, we'll let that one. I was thinking about selling a call on it now that we got an update, but I'm worried about a bigger gap opening on NVIDIA. Let's leave that trade on. Down a little bit on Nucor at this point in time. Microsoft, JP Morgan still we're struggling with. Banks are I don't think JP Morgan should be getting beat up as much as it is. The bigger bank, the regional banks are taking the hits because they're a little bit worried about the credit situation and looking at possible defaults. But JP Morgan isn't in that range. But man, the stock has really struggled. Even like you look at the 200-day moving average, we can't even get above that at this point in time. And go out a little bit further. We're just really in an area of chop. Broke down there and man, if we stay below that 200-day moving average, we kind of have, if you just focus in this area, a head and shoulders pattern. So that could be bad. The bottom of this recent channel of consolidation is 282, right at that range. Update today. I think we got to close it. Got to stick to our rule here. And it's sad because we were up on this trade We made a little bit on our call position, but I'm going to close this position out. We'll come back and we'll revisit. I want some financials in, and I think financials are getting beat up a little more than they should be. So we're going to come back and find another financial stock that we want to own, but it's not going to be JP Morgan today. Part of the reason why we looked at Morgan instead of Goldman Sachs is that it's a cheaper underlying. And the Goldman Sachs option was real expensive to buy because of the total cost of the actual stock. So we got JP Morgan in here, 2355 by 2560. 2485. Let's look at 24. Let's throw it in there at 24 and replace it and let that order work. All right. So I think we're good for the day. Our paper trade for our earnings play this week is JP Morgan, and we just tried to close JP Morgan, is Target. So we're going to straddle the market with a long call spread heading into Target's earnings. And then at the end of the week on Wednesday, we're going to come back and we'll look at Broadcom. Broadcom's going to be a very volatile one, but you will have all day Thursday and all day Friday. Probably going to look at a butterfly in Broadcom. And we're going to have a lot of things play out over the beginning of the week. So markets are looking resilient. I'm pretty happy with how strong the markets are looking at this point in time. We're going to get some jobs numbers at the end of the week. I'm surprised to see that, for example, the Russell 2000 index actually being positive for a minute here. So with that said, that's going to be it for Options Guy TV. We'll be back on Wednesday, and we'll take a peek at the Target trade, and then we'll look at a trade in Broadcom. Thanks for stopping in. We'll see you Wednesday inside the Tradier Hub, hub.tradier.com. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.